Welcome back. Guess we'll start out as we usually do, talk about the market. So things kind of spiked pre-market on Trump coming out and saying 100% tariffs on chips, except for these guys, these guys, these guys, and these guys. NASDAQ's still up. SPY just turned negative a few minutes before we kind of started this. So we'll see. I mean, my sense here is doesn't look like there's any real incentive to sell off. Doesn't look like there's any real incentive to rally. Maybe not a lot of data coming down the pike. I mean, I think maybe we have like a CPI report before the next Fed meeting. So not a lot going on. Wouldn't be shocked to see things kind of flatline from here. Market weakening a little bit as I talk, so we will see. Jeremy, your thoughts?
Yeah, kind of the same. I'm expecting this range. We're kind of edged up to where I was going to kind of establish an angular resistance, as in market compressing a little bit, consolidating, as we said the other day. Sold some covered calls, and now we just wait. So yeah, I'm expecting the market to be rangeful here for a little while, and then we'll see which way we break out once all this news and political stuff gets digested. Mix in the tariffs.
That's actually an interesting point. So, I mean, people who read my daily newsletter know I hate covered call ETFs. I don't typically like covered calls as a strategy. The reason why is you give up some upside and really don't help yourself much on the downside. But if you think we're stuck in a range bound market, that's the time to sell covered calls. I think I've probably got a covered call on UVIXI and my tail risk strategy. I don't think I have.
But if the market flattens out, doesn't the premium go down? So it's just kind of a self-defeating type thing.
No. That's actually a good thing.
Yeah, if you're sold open.
Sold the call.
Oh, right, I see.
So
but I mean, the next time. I mean, the more you sell, like next.
Well, yeah, I mean, volatility is only going to go down so much, and if the market is flat, and now, I mean, if it isn't, that's a different story. If the market is flat, you're still making money, holding on to your stock, basically being the casino.
Got it.
Pretty much.
So. Yeah, again, I'm not a fan. I'm not selling any calls. I am writing puts. I use some of I love property and casualty names, so they were a little bit weaker today. So I sold some puts on some of those guys. But yeah, I mean, same basic idea.
The key to options income strategies is that you don't have to hold things to expiration. You don't have to hang on to them any longer than you feel comfortable. If you're a chartist and you're pretty comfortable with market ranging like it is, you don't have to leave those contracts going. If you sell it to open and then you buy it to close for much less than you sold it to open for, you collect a profit and you still keep your position. So you can do whatever you want with it later. So it's more of an adaptive and dynamic strategy that has to coincide with being a bit of a chartist, and I guess I'm a self-proclaimed chartist these days. So,
right.
And we're going to be coming out with a slew of these things. And actually, one of our podcast guests from a previous podcast just gave me another idea for option-based income ETF we may end up collaborating on. So,
sweet.
Yeah, stay tuned.
Sweet.
All right. So I'm going to introduce Sergei Chmel, right? He is from NHD Capital or New Horizons Digital. He's in Lisbon. He's a crypto strategist, talks a lot about crypto. How you doing? Why don't you tell us a little bit about yourself, how you got into crypto and, maybe where you think the markets are going, et cetera, et cetera.
Sure. Nice to be here. Hi, everyone. I'm from traditional finance guy, former VC, private equity, doing financial modeling for startups. And then in late 2016, I came across the Ethereum at the time. And I was like, wow, that's something new and interesting. And to me, it was a kind of decentralized way to mobilize capital. So I was very excited about the ICO, all this movement, got really involved deep, managed a small VC, ICO Shark at the time, and went through the whole cycle and the whole ICO investing. And so that's where my like crypto journey and the crypto market understanding foundation lay down. Then I studied more about the Ethereum and Bitcoin, because for me Bitcoin was, not interesting. Like for VC guy, I didn't really understood Bitcoin at the beginning. But then more I studied Bitcoin, more I was like, holy moly, this is a real thing. And the more I studied, the more my personal allocation to Bitcoin grew up. So yeah, some people at some point even called me a Bitcoin maxi. So that
Right.
talks a lot. And I write a lot about Bitcoin.
I see. Okay, so question, you just brought up Ethereum, right? So let's talk about Ethereum, stable coins. Where are you on that, or where do you see that going?
So I am not Ethereum kind of maxi, and I actually have like non-conventional view on the space. So to me, well, because when ICO boom was in 2016, 17, 18, it was a lot of experimentation at the time. So, every business tried to issue tokens and to go on chain, et cetera, right? And so what we observed is that there is a handful, actually, real things which have real use cases on a blockchain. Okay, for instance, stable coins. Okay, so stable coins is the major kind of use case for the blockchains. Why the blockchain is needed, right? We tried a lot of different stuff, like. So when I talk about the stable coins, and Patrick, your article at that time, I think that when we kind of
Matt, yeah.
start talking,
Matt wrote
yeah.
those, by the way. Matt wrote that.
All right, so kudos. So I always say, if you want to understand where the digital asset space is going, follow the stable coins, because that's the foundation. When the stable coin share will grow, okay, then everything else will follow. And for me, like blockchains are like, people try to put every business in a blockchain, but to me, it's like only financial applications are good for blockchains, are perfectly suited for blockchains. So therefore, they will be the pioneers who will actually get traction. And stablecoins, and we are just barely scratching the surface. I mean, $200 billion of stable coins, it's nothing compared to trillions of dollars we have, outstanding. So that gap should be, be filled. And I'm not sure Ethereum is the winner. Here we saw how Tron, for instance, took half of the market share of transactions at some point very easily, just lowering the fees. Also, the blockchains are utilities, and people constantly repeat this, but they forget about, okay, now what's the utility? the utility goes, the price of the every transaction should gravitate to zero. That's the utility, right? Take any utility you have. I don't know. I looked through the different ones actually to trying to compare utilities and the blockchains and how, for instance, the valuation chart looks like, and for things like, I don't know, take your cellular, for instance. If you remember when there was a cellular boom, the valuations grew through the roof, right? It was like this bell curve. In Europe, it was even crazier because they were selling the licenses for billions and billions of dollars, if you remember. So I'm afraid that the blockchains like L1s probably, if they are truly utilities, they can follow this path. So I'm a little bit cautious with those like long term because, to me, those are like a shares. And but going back to stablecoins, because it's a real use case, wherever stablecoins go, and here I mean like maybe Ethereum, maybe Solana, maybe some other chain, there kind of the value will go, and all the activity will go. So that's my short, not short answer.
Got it. All right, Matt, any follows?
So where do you think the stable coins will go?
I think they will go wherever the transactional price will be lower. And I think eventually it will be free. So like stablecoin issuers will cover the transaction costs actually. And even by the way, I think USDT, they announced their own chain, right?
Right.
So the battle there is heating up. And all other applications which are really feasible for blockchains, like, I don't know, DeFi, for instance, right? Which really has like meaning and traction. They all kind of rely on stable coins. Without stable coins, there is no DeFi. So
Good point.
Right.
that's my kind of following. Stable coins, then whatever blockchain wins.
So do you think we're at like
winner.
peak, do you think we're at like peak Ethereum now? I mean, it's up a ton, whatever it is, 30. Do you have a chart in that or anything? I mean, it's up a ton. I mean, it seemed to me
think
that the reason you'd own it is all the stuff you said is that, they're what they can charge is going to zero. So that seems to be why you'd want to own it now.
That's why I don't want to own it. Yes, I'm not suggesting they're at peak. They can grow further with the market this cycle, but I wouldn't surprised if this cycle will be kind of the peak.
Right. Wow.
And then I don't really understand why to own Ethereum, where, for instance, you have smaller chains with the proof of traction already, and they have much more kind of room to grow. So I mean, like, if you want something safe and with a good upside, safe and stable, just buy Bitcoin. And then if you want real alpha, then you should buy some smaller chains with a more room to grow, kind of.
But like what, for example?
I mean, I have okay, Solana is the obvious choice. Then I don't know. I like Avalanche, for instance, because of the technology and modular system. You may like some others with the traction.
So you mentioned Tron.
I don't know.
Tron, you said Tron, correct?
Tron, yeah.
So Tron, is there a way? Does Tron have a stable coin you can buy? Or does Tron have not a stablecoin? Does Tron have a token, or is there something that you can trade? Tron, is there something you can buy that represents Tron?
Yeah, TRX. Yeah,
TRX.
Right.
TRX. Yeah, TRX.
All right.
I mean, I don't like Tron particularly because it's very centralized blockchain. So of course, I mean, you have to be, aware of other kind of parameters when you choose something. But yes, overall, the market is still very young. So that when the tide, it's a lot of debates like, will there be an alt season? Won't there be an alt season? And in my personal opinion, there of course will be, because the rotation will happen eventually, and I have no doubt about it. So when the tide will come, everything kind of will grow, but some things will outgrow others, and that's already a nullifier, for majority of people, just buy Bitcoin and stay safe. That
Right.
would be my kind of mantra.
I've never heard anyone call Bitcoin safe before.
Right.
I get scared.
Last one. So how
Yeah.
about like Chainlink? Where are you on Chain?
Chainlink?
Yeah.
I don't understand how the Oracle can be so expensive, like data Oracle. So yeah, I'm trying to stay away of things I don't understand. For instance, like Hyperliquid, which is very hyped, is just so richly valued that I don't know. I prefer to, there are a lot of things which are valued far less rich, and again, if the tide comes up, and it's like it's not something new things, like say Uniswap, for instance, trades, I don't know, almost 10x below the all-time highs, for instance. Like, all other DeFi projects as well are very, very interesting, and they have very low valuations at this point. Chains like Avalanche, for instance, are as well very, very, have very low valuation comparing to others, and have a good technical base, for instance. So yeah, you can find some things on the market right now which are valued quite good,
Right.
That's a kind of
How do you
value.
how do you come up with valuation?
Good
So
question.
yeah, so I mean, we're more stock guys, and stocks, everyone knows. I mean, companies got earnings, and it's going to trade on a multiple of earnings.
Our favorite word is alpha.
What's that?
Our favorite word is alpha.
Well, yeah, I mean, alpha is different, but company's going to trade based on some sort of multiple of earnings, and
Yes.
the more volatile the earnings, or the more potential the earnings, those are going to change around. How do you come up with value in this arena?
So of course there is no conventional valuation
Right.
methodics right now, right? But what can we do here? Like for instance, we can use metrics which we used back in the day when the internet era, right? So you can look at users, for instance, right? How many users the protocol or chain has. You can find those metrics. There are several services. They provide on-chain data, and they provide users. They provide like volumes, different on-chain activity. So you can check and apply these metrics to the valuation. By the way, the protocol, they also have earnings, whether the fees, you can apply fees generated by the protocol as an earnings, distributed to token holders. That's not always the case, by the way. Some protocols do distribute the earnings, some are not. So, but this is maturing right now. So more and more protocols, for instance, are sharing the profits from the fees they generating with the token holders in a different ways. It's buybacks, burning, yield, whatever. So
Cool.
Got
So
it.
now, like, we've got a chart of Ether up here right now, and I think you were saying you're not a big fan of Ether here.
yeah,
So
yeah.
would you say, all right, Ether's overvalued?
I would say it has less potential to grow
Okay.
from here than other non-conventional chains.
I mean,
For instance, like what the Ether is already pretty big in terms of the total value, right? Valuation. And so if you compare it with for instance, like what the fee revenue of the chain, this kind of metrics, it's pretty rich. It's like 1000x kind of PE. So, how much it can grow from here? Okay, can it double? And if it doubles, it's almost $1 trillion company. But it barely generates, tenths of the revenue of, $1 trillion company. So yeah, it's a bit stretched to my
Okay.
All
taste.
right.
So you
Well,
said you liked Avalanche, right? So there's probably no chart of avalanches. Matt? I mean, how would you find that, right? But having said all that, like, why do you like that? I mean, just kind of that a layman person could understand,
yes,
like
sir.
myself.
Avalanche, baby.
There it is. All right,
yep.
sweet.
Yeah, here it is.
There's
Think of
I
a
mean,
symbol for think of a symbol for 2x avalanche, man. That would be a good one. To be like, wow, I'm gonna come
so
up with
yeah,
one.
I like them as a from the technical point of view, because like, Ethereum has this, everlasting loop where they are too expensive, right, and too slow, and then L2s are not really working. They kind of what they do that they um,
Can you explain
uh,
L2 layer two, why for all of us too? Because
Right.
maybe that just so we all get that,
e-
because we're not,
oh
especially me.
e-
Especially.
okay, sure. So L2 is like a layer 2 blockchain, which kind of what it does, it says, okay, guys, you can make transactions here cheaper on our blockchain. And then once in a while, we bench those transactions and we kind of put it in the blocks on the main chain. So there will be your proof of ledger. Okay, this is how we kind of secure your transactions. So once in a while, we bench transactions here, put it on the blockchain, on the main blockchain, and this is how we make your transactions cheaper. Okay, but then you need to bridge your assets from the main chain to the L2. And also L2s are a little bit greedy. They want their own token to perform. So they also tell you that, you know what, you must use our token as well to make a transactions. Okay, so that makes kind of the whole, it doesn't make main chain plus L2s as a whole liquidity pool. It just fragments all the liquidity.
So like
So that's
L1
a
is the chain and
downside.
L2 is like the picks and axes kind of analogy, or is that even reasonable or no? No.
Yeah, it is. It's like, how to make this L1 transaction is very expensive and slow. So let's do voodoo here between us, and then how we kind of secure this voodoo between us. Okay, once in a while, we just put everything we just did to the L1. So we kind of do a security stamp of what we have just done.
All right. So going back to Avalanche, you said Avalanche is like a better, cheaper, faster L2. Is that kind of what you're saying? Or did I miss that?
It's not an L2, it's L1,
Oh, I see.
actually. Yeah, but it allows you to create a lot of chains, customize those chains, and also they share the state. So it's easy for liquidity to flow between the chains. That's kind of what they
Right.
allow you to do. Yeah.
All right.
And
Okay.
yeah, that's basically like, because if we are moving to the world where the many things will be on chain, right? Then, we need to accommodate different use cases, right? Someone wants it to be free, for instance, for the users. And so, like, how do you do this on Ethereum? You cannot. Every transaction has a cost, no
Right.
matter what. So, and it's like difficult to build something very custom with the Ethereum and L2.
Got it. Okay. That makes
Yeah,
sense. All right. I like this one.
Alex,
So I got another question for you. Okay.
sure.
So it sounds like then you would say that, putting a real estate building on the chain or, tokenizing it. I've read that, companies are doing this in Dubai, et cetera, et cetera. That doesn't really fit into what you think the chain or the blockchain should do, right? You believe it's
Yeah,
more of a digital asset structure versus real assets. It seems right, kind of?
yeah.
Yeah.
Yeah, absolutely.
Yeah.
Absolutely. Well, the idea of the blockchain was to eliminate the counterparty and the counterparty risk, right?
Right.
Uh, and but with the tokenization of real assets, we are not doing that. Instead, we are adding up counterparties, who are
Right.
real holders. Okay, so I mean that doesn't make much sense in a way.
Yeah, I get it. Yeah, I mean, it
When
makes.
it makes sense actually, and how I see the future unfolding is the assets to be minted and issued directly on chain. Okay, those assets will be the foundation of everything else. And if you look at what BlackRock doing or others, they are doing, they grew they BUIDL from like what 200 millions to almost $2.5 billion less than a year. And I can tell you from the hedge fund perspective that like literally everyone is now starting to use those tokens as a collateral, and like so. I mean, that's kind of the real stuff. And then I'm expecting kind of debt to be issued. For instance, bonds. Instead of issuing the paper bonds, why wouldn't you issue it right on a blockchain? And the only back to to beginning of our conversation, stable coins, right? So you need the liquidity for that. When you have a liquidity on chain, so stable coins market will grow up, then I don't know, Apple can go and say, okay, we are issuing the debt in a form of the token. And that will be a real on-chain asset, Or
Right.
US government can issue, like, why not, treasuries like in the form of the token. So
Right.
that's the real blockchain kind of use case in the future. And of course, stocks, for instance, right? Why
Yeah.
we can eliminate, imagine how many counterparts you can eliminate by issuing a stock on a blockchain directly as a token. And you won't have, remember, I think it was 2023 when a London exchange what was it? They shorted 130% of the shares or something like that. So because nobody knows who owns what, the financial system is so like leveraged that nobody knows where the underlying assets are actually and how much are they,
Right.
And with the blockchain, it's so easy. I mean, you just go to Explorer and that's it. You are there. So that's where we should go. I don't know. I mean, eventually we will be there, but let's see.
So Matt, you run a fund. You're a stock guy. So if stocks are on the blockchain, how does that help us or you or the company and all that? Does it make it cheaper?
Remains to be seen. Right now I've got counterparties, custodians, all of that stuff. Could make my life easier. Also could put us out of business because you could just put all this stuff, on the blockchain, and then who needs an ETF issuer? I think the world is and it always does. The world is going to keep getting more and more interesting. And, guys like me have to adapt or die, basically. Like,
I wouldn't worry. Don't worry, Matthew.
no, I'm
You
not.
will still exist. I mean, it's just the technology will be different. It's
Well,
like with the
we've
internet.
adapted. We've adapted. We have like 2x
Right.
IBIT, and
I
we have
will
other. We have
figure
Exactly,
something
exactly.
out. Yeah,
Right.
I mean,
Like,
I'm smart guys will figure something out. I mean, it's kind of like, AI. There's a whole bunch of people who, put themselves at the mercy of AI taking their jobs, and yeah, people will figure it out.
no,
I,
what will happen is just your costs will go down, okay? And
Which would
then
be great.
also, yeah, and then also the instruments, what you can do, what you can like wrap up into your products. Also, you will increase in functionality what you can do. So that's it.
I have kind of a
World won't change kind of entirely.
Right.
I have kind of a
Go ahead,
theory
Joe.
on that. If you're able to leverage debt based on a digital asset or token, suddenly you have competition against every centralized bank out there. Currently, like interest on home loans is what 6.75 or 7% or whatever. What's to stop you from borrowing against a token instead of borrowing against the U.S. Treasury or the bank? And you can get in, and negotiate a lower rate. I mean, it's essentially what we're leading to here. It's utilitarian use is pretty much
I
limitless.
can tell you it's already happening. Like I can get a mortgage on my BTC.
Really?
I mean
Yep.
collateral, yes.
I didn't know that.
So the fun
Yeah,
part
I mean
is like
it's a niche product, but that will be soon,
here,
Right.
in
I
every
gotta figure
television
out
in
how
the country.
to budget as collateral for securities transactions.
right
Can't
Yeah.
do that yet.
here in the U.S. I mean, we have a consumer debt problem that is like a sword over our economical heads here, and you got credit card rates with revolving debt on the consumer at like 28% or something like that. That's insane. What if you could literally refi that based on a digital asset? Let's say, okay, well, instead of making payments to these credit cards, I'm going to default them, buy a digital asset, lever against that to, essentially reestablish debt at a lower rate, and then, essentially borrow to pay off debt. That's kind of an interesting concept, and I think that's on the horizon here.
All right.
Yeah, maybe. I mean, the digital assets won't help you with that. I can tell this for sure. what they can help is with the, transparency and can move things, faster, do things more efficient, etc., etc. But with the debt, the only thing will help you is devaluation, and
Right.
that's happening. So that's the only thing you can lower your debt. Just make the value of the money less.
Good point.
All right. So I'm going to switch gears here a little bit, right? So we talk about, we have this, this is called the Financial Heat podcast. We have this thing called the Heat formula, which is hedges, edges, asymmetric risk and themes, right? But we also do first, second, third order thinking, right? So you posted on LinkedIn, Sergey, like about Visa, right? And
Yeah.
how for decades, these parasites were sitting on every transaction, hope you'll advantage now, you said, right? I like that. So that's cool. So like, pull up a chart on Visa, Matt. Do you have that one? Like, so do you think Visa's like then, kind of a short as well as some of these other MasterCards, banks, et cetera, or where do you lie in that? I mean, obviously that's what you're saying, right?
Yes, because like technologically, with the blockchain and stable coins, to make a transaction or a payment, whatever you call it, the only thing you need is your phone and the QR code. I mean the wallet on your phone with the stable coins and the QR code to make a payment, which I did several times. Out of tests, I bought few things on some shops. They offer stable coins. You can buy clothes for stable coins, for instance. And it's easy. You just scan the QR code and that's it. And the merchant saves 3% or something like that. So kind of no brainer.
Where are you on that,
From the
Matt?
technological standpoint, I don't and then the technology always wins. So kind of.
Right.
I was talking about this somewhere, whether it was this podcast, another podcast, I don't remember. So, and I've certainly written about this. So one of the things I think the regional banks, I mean, I've always thought the regional banks were in trouble. I think this is not a good thing for regional banks. Obviously, we have an inverse regional bank ETF, which I launched because I think the regional banks are in trouble. I think stable coins hurt regional banks. I do think they hurt Visa and MasterCard. I would be careful though, like, Fairfield County Community Bank is not too big to fail. If they run into trouble, no one's bailing them out. If Visa and MasterCard run into trouble, they've greased all the right palms. Chances are they will be okay. I wouldn't be going long. I mean, I look at this Visa chart right now, and it's a short below the 200-day moving average. I look at, MasterCard's a short below the 50-day. I mean, both of these don't look great. I wouldn't be buying them.
But Visa is not a bank.
No, I know they're not a bank. I'm just saying
Right.
they've made all the right political contributions.
I mean, nobody gonna bail them out. That's what I mean. They're not a bank. They're just processing.
But it's not bailing them out. It's helping them with regulations and things like that. You're not in the US, but the way things sometimes work here is it's not what you know, it's who you know. And if you're contributing to the right people's campaigns,
Right.
all of a sudden a law gets passed that makes it so that you're in decent shape. Versus like some stable coin company that just comes out of the blue and hasn't contributed to the right people. And again, I'm not saying that's going to happen. I'm just saying I feel more comfortable shorting regional banks than I do MasterCard and Visa. I'm not going to own MasterCard and Visa.
I mean, that you're absolutely right. That will happen. Of course, they will be fight. They will fight for But on a long term, the technology wins. So that's no brainer to me.
Oh yeah. Totally.
In terms of the banks,
MasterCard would have to pivot to survive. I mean, at some point, legislation's not going to be able to save you.
So let's just say this, right? So like
maybe they
MasterCard's probably at
split.
like, oh, sorry. But let me finish. So like MasterCard's probably at what, 25, 30, 40 times earnings here. I mean, the
Yeah.
stock could go to like 50 before like, anyone's going to step in and say, oh, let's help MasterCard with some regulations or whatever, right?
No, I mean, if MasterCard goes to 50, it's 564 right now.
Yeah.
That's a disaster for
Yeah.
MasterCard.
All
Great
right.
for
Well,
people who short it.
I don't know. I'm just saying. I don't know. All right. So, all right. So I'm going to move on. So, you also said what Bitcoin you asked. How about 28 billion worth of value transaction in a single day on Bitcoin? What does that tell you? I don't know. Is that a big number? 28 bill?
It is pretty significant, yeah.
Yeah.
Yeah, it is. It's more than Visa and MasterCard, for
Right.
sure.
Oh, it is. I
A
see.
year for year, so kind of.
Yeah.
Right. I see.
I mean,
Okay.
there's always somebody on the other side of the leverage, though. So you got to wonder: are these credit issuers and regional banks alike? Are they able to pivot over towards digital assets to kind of make up the difference if they start losing ground in their palm greasing tactics? That's going to be interesting to see happen, because I wonder if they're going to be able to pivot fast enough to do that.
Right. Yeah. I mean, that's what I'm saying. So, yeah, go ahead.
I think it will be more like if you remember when Amazon first appeared, so people just extrapolated and say that, okay, now like we won't have real shops anymore, but
Right.
here we are in 2025 and we still have a real shop where you can go in, right?
Right.
There's even real
So
shops that supply themselves from Amazon. So
Right.
exactly. So they would definitely, I mean, a lot of banks will die, and they would definitely need to look at DeFi and how they can use those, instruments in their business. That's
Right.
for sure, for sure.
Such a good analogy you just made, because Amazon, like, I mean, even though you say there are still stores, but like you look at like Amazon just killed Party City, they
yep.
killed Joanne's, they've killed, I don't know what else they've killed, but they've killed a lot, and even though
Yeah.
I don't know what that means, but all right. So I'm going to go somewhere else with this now, right? So you published something from an investment advisor, like a regular, guy in our industry named Rick Edelman, dubbed Mr. RIA, who manages 300 billion for 1.3 million clients. Barron's Advisors. He said that digital assets should be, 10% of your portfolio if you're conservative, 25% if you're moderate risk, 40% if you're aggressive. I'm going to go to Matt first. What do you think about that, Matt?
Yeah, I mean, and he is a very well-known financial advisor, so that kind of shook things up. I personally have 12.5%, but I do it with options. So my 12.5% is using Delta. Because I'm using options, because of the strategies I'm using, if Bitcoin goes to zero, I'm not losing 12.5% of my portfolio value, because I've set it up for asymmetrical returns. I do think, the future is going to see people having, say 12.5% to 25% in digital assets in their portfolio. I think it also depends on what those digital assets are. Like, Sergey had mentioned, hey, just being in nice, safe Bitcoin. Bitcoin, I would argue, is not safe, but compared to, and I don't know anything about Avalanche, but I would assume compared to Avalanche, Bitcoin is safer. So it also depends on what you have. But one of the things that we talk about with the heat formula, and is going to come out in our book, is one way to apply it is rethinking the permanent portfolio idea, where the permanent portfolio has 25% gold, saying, well, Bitcoin is almost like digital gold. So maybe, and the way I look at it personally is 12.5% crypto, 12.5% gold. So I do think there will be a rethinking of crypto exposure, where now maybe you go to, your Merrill Lynch advisor and he's like, yeah, 1 or 2% in IBIT, I think that number is going to go up.
Got it. So, Sergey, let me ask you. So, let's say Matt's putting 12.5% into, quote unquote, crypto, right? Like, and let's say Matt probably has 100 million under management in his own book. So, let's say, so Matt's putting 12.5 million into crypto. So, how much of that how should he break up that 12?
Well, to me, the optimal was always like 80% Bitcoin, 20% everything else.
Yeah.
And if you want to go more aggressive, then you can do 70%, or if you are very aggressive, you can do 60%. But for 80% Bitcoin, 20% everything else is to me what you can advise almost to everyone. Well,
Right.
I mean, to everyone you can advise 100% Bitcoin and just forget about it. But
Right.
for others, 80-20 is okay. And the reason is because what we discussed earlier about how to value Ethereum, or Avalanche, or whatever chain or whatever protocol there is. Those are really startups, to be honest. Even Ethereum is a startup. We don't know if they succeed, because of those problems we mentioned, like too costly per transactions, too slow, could they scale? If we are talking about I don't know, 2 trillions of stable coins and 1 billion people transacting every day, can they handle this? Today, no, they cannot. So those are really a VC kind of projects with the shares liquid in the market.
Right. I mean, I would think like Matt would probably say you don't get enough alpha if you only put 20% into something. No, Matt? Would you ever do that?
Sure. I mean, 20% is a meaningful
Okay.
exposure. I mean,
Okay.
it comes down to what you're trying to do. I mean, I'm older. I manage my portfolio conservatively because I can't, being up 50% is not going to change my lifestyle. Being down 50% is going to suck. So, 20% in something is meaningful for me because I'm not trying to knock the cover off the ball. Whereas, someone who's 25 and has $10,000 and wants to triple it in a year, yeah, I mean, you've got to concentrate your portfolio and take some risks if you want to do that.
12.5, actually.
All right. So last question. So this is kind of more of a complicated. What is your view on the future of centralized exchanges versus decentralized exchanges?
That's what I said, for instance, about Uniswap. So for me, in my view, Uniswap is no different than Coinbase, although it's more efficient than Coinbase, right? So why it's 10 times cheaper in valuation, even more. I think now it's 20 times cheaper in valuation than Coinbase. I don't know, but today.
So does Uniswap have an equity? Are you talking about the coin Uniswap, or does Uniswap have an equity?
Yeah, the token.
It has a token. Yeah, it has a token. But
yeah.
So what about like Coinbase as a stock then, or as a company? Matt, want to pull that one up? Coin.
Yeah.
What do you think of Coin? I mean, or Robinhood or any of these guys? Then I mean, in your kind of analysis, those would be not long-term things to hold if you're trying to hold them based on their crypto trading, right?
Yeah, they follow the crypto cycle. Absolutely. So kind of, but those are, if you have a, I don't know, Schwab account and you can't buy anything else, you are buying coin, right? It's a safe kind of proxy to the crypto world.
Got it.
And hence we have ETFs right now, but I don't know.
I was going to mention that.
My friend from London with the pension account, he doesn't have an access to, for instance, the IBIT. He just doesn't. So, and he is asking like, what shall I do? And what can I say? Okay, buy strategy or buy coin or buy both. You know, if you want to play kind of this
I
game.
see.
So,
Okay,
yeah.
so it's a kind of a double-edged sword. If you want to be in the game, this is a good way to trade it, and it gives you
Yeah.
exposure. But you're
Yeah.
saying long term, these guys are going to have some pricing issues because there's a lot of competitors that can do this a lot cheaper than they can. So that's kind of what you're saying.
Yep.
And coin also, they have base, right? They have their own L2, and they understand that decentralized exchanges are the threat to them, and that's like the more efficient way to do a business. And they understand that, like in 5 years, 7 years from now, those two worlds will be, much more kind of integrated one to another. So if you don't have a strategy today, you're out of business tomorrow. Exactly.
Got it. I see. So they already have an L2 strategy, and they kind of have it.
Yes.
Right. Yeah.
Yeah.
Cool. All right. Sweet. Jay, any more questions out there in left field?
I think that was us. I was going to lead a little bit into ETFs.
Go for it.
Like for my strategies that I do, I mean, I do have different portfolios. So I have a long-term, very low risk, fairly stable portfolio set up, and then I allocate some funds for my short-term swing trading and day trading and alike. So a lot of my crypto exposure tends to be into either crypto-related ETFs or even leveraged crypto-related ETFs. And on the other side of that is things like COIN and heck, even MicroStrategy is one of them. And if you're looking for alpha, those are great for trading. If you're looking for an investment, something that's more stable, something that doesn't have these wild percentage swings, because as a trader, our focus is we want the best bang for our buck. Percentage is alpha to us. Something for a store of value is going to be more into leaning in Bitcoin or stuff that's going to actually hold some value. Even stable coins come into play on that. And then as far as the market is concerned, it's all going to take the path of least resistance, which in this case is going to be the path of most cost effectiveness for transacting. So, if you're going to go pay transacting fees for stable coins that are they're going to be competitive, cool. You just go shop for the cheapest transaction. There's your store of value. Versus going into something and trading like in Coinbase, even it can be a little bit more expensive. So it's kind of going to be an interesting game as far as store of value and investment side of stuff. But for traders, man, the market's wide open. You got many choices you can go into to do whatever you want. I mean, you can accomplish anything with leverage to Bitcoin and leverage to other cryptos.
Got it. So, Sergey, where can we find you, man? Do you have like a website or anything you want to give to us, Matt? Can you pull that up real quick?
We have a website, NHD.capital, and LinkedIn, I think the best way at Sergei Chmel.
Okay.
So, yeah.
He's gone.
Oh,
Matt?
He's trading.
Sorry, I got to had
right.
a slight issue with the counterparty.
He's selling Ethereum, probably.
Right. No.
Yeah,
All right. So.
Yeah, I've got I got the website link in the description. I was just making sure I did.
All right, cool.
And then I can throw your link in there as well if you'd like.
Sergey? Can you hear
I thought he was frozen for a second.
Yes.
Like,
No.
He just asked if you can put your LinkedIn in the description.
That's
fine?
Sorry.
Yeah, sure.
Okay, cool.
Of course.
Indirectly. I had to verify that your screen was still moving. Sorry. It's that you froze.
Yeah, no.
All right. Thank you, guys. See you later. Have a good day, man.
Thanks to you guys.
Yeah.
Thank you.